Hi again, everyone. Paul Lang from Disciplined Trading Strategies with this ongoing series, What Matters in Trading and Investing. I'm going to bet that this podcast gets fewer downloads than the others. Discipline, really? What a boring topic. Discipline. It's an important word in most everything that we do in life, but in trading, it has a very special place. When a new trader discovers that you can make a former week's salary in a couple of hours, it brings about emotions of greed and then fear that have even intelligent people often doing stupid things. If you've only half listened to my other podcasts, I think you understand by now that technical analysis is the only way to make money in the market unless you have millions of dollars to spend on your own independent research. I don't consider that my opinion, I consider that a fact. Here's a simple, brutal truth. Anyone can easily learn technical analysis. It is literally the case that the intelligence level required is not any more than that of a fifth grader. The first issue, however, is that very few actually learn it properly, but even those that do are not guaranteed success. Why not? Discipline, or more precisely, the lack of discipline. Over the years, I've worked with a lot of people, both informally, people that come to me not as a student, but just asking a question as an outsider. I try to help them when I can. And then, of course, I have students that come to me new and experienced. And I have to tell you that this is truly the bigger problem. Anybody who puts their mind to it can learn the skills they need to understand a chart, to make money on anything they want to trade in any time frame, long-term, short-term, whatever you want to do. The bigger problem is getting yourself to do what it is you need to do. Discipline can be defined in many different ways in trading. A common definition that I hear and I use is how well a trader follows their trading plan. And this is true, certainly to the extent that if you can't follow what you're supposed to do, you'll never succeed. And that's a sign of a lack of discipline. But here's the big thing. Here's the higher level understanding of this concept. Following a plan doesn't guarantee success. It depends a lot on what your plan has to say. Take, for example, somebody who's on a diet. Let's say their plan, if you will, is to drink water and eat celery sticks 6 days a week and then to fast on the 7th day. Well, that's a great plan, but guess what? They're not going to follow their plan. But that's not a function of discipline. That's a function of having a plan that simply is not doable, not obtainable, and certainly not obtainable for that particular person, probably. The same thing applies in trading. Part of it boils down to the simple concept of having a plan in the market or with whatever you're trading that aligns with a concept that you actually can do. Many traders borrow ideas and come up with theoretical trades that they can't actually do. They can't pull the trigger, or when they can pull the trigger, get in the trade, the more important part is that they can't manage them. Psychology really comes into place in the management of trades. But very simply, here's an absolute fact for you. You may or may not know this, but your entire career as a trader, whether long-term or whether a day trader, will always rest with how well you manage your trades, period. And guess what? All the psychology, almost all of it, comes into the management of trades. New traders think it's a piece of cake. You just show me what to do and I'll go do it and I'll make money. The problem is that trading is not engineering and it's not architecture. There's some art to it. When we say the target's going to be 60-50, for example, there's no guarantee you're going to get there. So what do you do when you come up 5 cents short of that target and then you end up losing money because you didn't take that target? Somebody told me that's where it's supposed to go. It didn't get there. What do I do? What most traders do is quickly grab the philosophy of not letting any profits get past them. There are even some very poor sayings out there that support that, like you should never let a profit turn into a loss. You should always protect every penny of profits. Believe it or not, this is what losing traders are made out of. Your goal is to make money at the end of X number of trades, not to listen to theoretical sayings that are promoted by people who can't make money in the market. I want to pause a moment and emphasize that maybe some of my podcast topics seem boring to you. Trading, investing is supposed to be fun, exciting, exhilarating. You're supposed to be taking Tesla long and short, and you're supposed to be going long and short Bitcoin every other day. That's not what trading is about, at least not to me. Trading should be boring. It should be extremely boring. The truth of it is that these boring topics are the ones that will make or break you as a trader. I haven't in a long time, but earlier in my career, I used to go to money shows with a company I was with. And it's always the same thing in every money show. If you have a guy in one room that's doing a presentation about this great new piece of software that's going to make you money automatically for $149 a month, and you have another great trader in the room next to them talking about the importance of psychology in your trading, guess what? The psychology room is going to be empty. And the guy selling the snake oil garbage software is going to be packed. That's just the way it is. But at some point, most traders come to realize that the real truth is in understanding some of these boring topics, like psychology, like discipline. The actual trading part of things should be very boring. In some of the upcoming episodes, I'm going to focus a little bit more on some details of things, give you some trade ideas that I do, give you a sample of how it is that I trade to get some of these points across. But I wanted to start off with these first 7, 8, 9, 10 episodes and really put the most important things forward first. Yes, some are boring, but I really suggest that if you're listening to this one, go back and listen to all the others, whether you like the name of the topic or not, whether you think it's important or not. These are all good topics, and I've chosen these to be the first 10 or so podcasts that I'm doing. This is in an effort to try and help anybody that's listening to me to understand what it is that is needed in trading and investing successfully. Part of what I do during the day, I run a trading room at Discipline Trading Strategies, and we trade the first couple hours of the day, day trading. That's about it, just typically from 8:30 to 10:30, maybe 11 o'clock. I often will let something open for the day and maybe manage it, but typically we're usually done trading. Lately, it's been a little more choppy market. Sometimes we're coming back at lunch to take a look at something, but I'm a very laid back type of day trader. I'm a very boring type of day trader. I look for the easy kills, if you will. It never fails, though, whenever you have somebody new in the room. They're suggesting this stock that just gapped from 10 to 40 yesterday and now pull back to 20, and they want to know if it's a good buy when it's gapping to 25. This is the crazy garbage that people lose money on. They think that's the secret because of the volatility. Sure, I don't want to fall asleep watching a stock, but here's the truth of it. If a stock moves 30 cents, and let's say you have a 30-cent stop, you made whatever you risked. If you risked $500, you made $500. If you find some crazy $2 stock that moved 50 cents for a $2 stock and you had a 50-cent stop, you still made whatever your risk amount was, $500 or whatever. You didn't make any more money. It's not a function of volatility being the secret. It's a function of something you can manage. It's a function of finding that perfect little moment in time entry so that a move you get proportionally to where you're likely going to have to exit the trade is a very nice move. When you go after the crazy stuff, you end up having to try it 2 or 3 times because you stop out, and you end up using a stop that's just as wide as the target you're going for. So it makes no sense to me. Boring precision is how you make money in trading. Long-term, day trading, it doesn't matter. How did I veer off on that topic when the title of this episode is discipline? Well, I didn't veer off. I just wanted to come back full circle because guess what? It's very easy to enter and manage boring trades. It's very difficult and hard psychologically to get into a $10 stock that's moving up and down 60 cents every 3 minutes. I always have a list of topics. I told you I have over 100 presentations I've done to groups, and I'm never quite sure what the next one's going to be. It's kind of whatever catches my fancy. But as I'm sitting here, I think maybe it's time to show you some examples of some of the things I do. And maybe the next one's going to be called Precision is What Matters, because that's my philosophy. To sum up some of these comments on discipline, though, there are a few words that all end up being in the same basket in trading at the end of the day. Discipline, trading plan, psychology, confidence, experience. They're all right in there. They all are related to each other. In one of my seminar programs, this line is written: the antidote to all psychological problems is a properly executed trading plan, which, along with incremental risk progression, is what builds confidence. It's kind of a circular concept, pulling yourself up by your own bootstraps, if you will. Small success breeds confidence. Confidence gives you the ability to follow the plan you're supposed to have because it's working. You can only gain that confidence by starting off with small risk, because the greater the risk, the more the psychological demons creep in. As you become successful, you become more confident, you're able to handle higher risk amounts. All of this is maybe under the umbrella of experience, but it's something that can be accomplished very quickly if you do it properly. Unfortunately, the human nature of most people is to do the exact reverse. This is the key reason why most people fail when they come to trading. So yes, discipline is the ability to follow your trading plan, but what is really key is what that plan says and does, and how you write it and how you pursue it. You'll see in the slide notes, I have one slide down there. And it's something that I always refer to whenever I'm teaching, and it's called the 3-legged stool. It's something I came up with. And the 3 legs of the stool are critically important for anyone who wants to be successful. The first part of it, of course, is to understand technical analysis, how to read a chart, but that's not good enough. And that's why that word superior there is really important. Superior technical understanding. A C plus, a B minus understanding of charts will have you losing money at a slow rate. Part of what I teach in that, though, is also called math and probabilities. It's the understanding that, believe it or not, you don't even have to know the direction of something to make money necessarily. It's what I refer to as that birthplace of the trade, that moment in time. That's my goal in trading, is to always find that. When you understand it, it's an amazing thing. And then, of course, the third leg is psychology and or experience. This is where discipline comes in, because discipline is what gives you the ability to master your psychology. Take a quick look at that slide note. I hope you've enjoyed this talk about discipline and trading. Be sure to subscribe to this podcast if you like it. Until next time, this is Paul from Discipline Trading Strategies. Good trading, everybody.